Welcome back, everybody. SF Live episode 210. I'm joined in a few short seconds here by Chris Berry. He is, what's your official title, Chris? I think it's Managing Director, Managing Partner at Mountain House Partners. DiscoveryInvesting.com is his website. He's one of the leading opinion formers, like people I know in the battery metal space. Somebody I lean heavily on when I need some research done or need to reach out and say, Chris, what's going on in this space? So I'm really excited for him to come back on. We chatted in June, and I had to postpone last Thursday our interview, and he said, well, there's lots happening over the weekend, or there will be lots happening between Thursday and today, Monday. So really curious to hear what is happening in the space, and we'll be catching up with them in a few short seconds, as I said. Before we switch over, a couple things. Follow us on YouTube, follow us on Twitter. Don't forget to hit the like and subscribe button, turn on the bell notification as well. We do all our interviews live, so make sure to use that to your advantage. And also, post your questions. We will be monitoring Twitter and YouTube as well, the chat. And if you have any questions for Chris about ESG in mining and battery metals, does it even make sense what we're doing? Are the batteries clean? Maybe you have a question in that regard. Put them here in the YouTube chat or put them on Twitter. We'll see them and ask Chris when we get to it as well. Now, without further ado, let me switch over. Chris, it is good to see you. I hope I unmuted you. Can you say something? Yeah.
Hello, Kai.
Perfect.
Good to see you again. All right.
Perfect. No, it's like it's happened too many times. Like it's one of my pet. Like I forgot to push the button. So, Chris, it's good to see you. Thanks for coming on the program. It's great to catch up with you. We just had a chance to chat for 10 minutes before we went live. You were on the program in June, so we hosted SF Online. It was session 9 on battery metals in particular. We had a great panel discussion. There's actually a lot for me that I personally took away from it, and a lot of themes that we need to follow up on. Let's talk macro, I think. We should start on the macro. And there are a lot of different trends in the EV battery metal space that we could follow. It starts with recycling. Macro is one I mentioned, like what is happening in China, what is happening in Afghanistan. I just saw you put a post out there. So I'm quite curious, like, what do you think there? But incentives, metals, and then stocks as well, like investment trends as well. We do want to come out of this after 20 minutes and say, okay, people, this is where you should put your money or should not put your money ideally, or that's where I think at least that might be some interesting advancements that we can take away and maybe worth a closer look as well, of course. But Chris, quick introduction, like, cause this is the first interview we've done in a while on SF Live. Why don't you quickly introduce yourself? I try to do a good job, but it's always better to hear it straight from you.
Okay. Well, thanks very much for that. So I've spent about 24 years in the financial markets, and in 2010, actually broke away from a job that I had when I was working in New York, and decided that I wanted to put together my own independent research platform that focused on this idea, this thematic of energy metals, any metal or mineral used in the generation or storage of electricity. I found that these markets were highly inefficient, small, and not well understood. And therein lies the opportunity. I've always had a passion for geopolitics, for commodity supply and demand, and also technology. And so the research and the advisory business that I run today, started back in 2010, really focuses on the collision of those three themes. And so I'll work with investors, I'll work with corporates of all shapes and sizes, very busy these days with OEMs and oil and gas companies, all shifting and thinking about their electrification strategy. So a little bit all over the map, but really, optimistic and bullish out over the next 10 to 15 years on this electrification theme in the entire supply chain.
Yeah, perfect. And I think that's a good topic. I'm really trying to, because it's such a broad topic. It's not just one, as you said, oil and gas manufacturers going into the clean energy space as well. That's one huge topic we could talk probably hours on. Like, what are they trying to do? Macro as well. It's also about the metals and the supply chain in general. Where is it all coming from? We hear countries demanding going all electric from the car makers by 2030. That's 8 years from now. 8.5 years from now. It feels like it's going to be tomorrow, right?
Yeah.
So on that part, we could spend hours. But as I said, like I'm trying to lead it down a path so we can actually take away a bit from it, because our focus is junior mining, obviously. Mm-hmm. So trying to funnel it down to that route. But let's start macro. What have you seen develop in recent months? What kind of themes have you witnessed that might have changed a little bit? And give us an update in the market in general. What are you seeing? Is something accelerating some trends?
Well, yeah, I think, look, since I call it the last energy and metal cycle in 2017, there are two changes, two things that are different now. And I'm not here to say that this time it's different, but I would say the rise of ESG is something that is a lot more prevalent today than it was back in 2017. And sort of the mandate that the mining companies in particular have in terms of proving to stakeholders along the supply chain that they can produce ample quantities of battery grade material at scale. I think the jury, quite frankly, is still out on that. That's number one. Number two is the fact that you've seen an absolute flood of capital start to come into the electrification supply chain. Companies like General Motors, Stellantis, Phillips 66, Rio Tinto. I mean, the list goes on and on. These aren't, junior mining companies talking about doing a merger to stay alive. These are major multi-billion-dollar market cap companies that, as I mentioned before, are thinking hard about their electrification strategy and how to position themselves to capture the growth in the next 10 to 15 to 20 years. The fundamental, underpinning of my investment strategy is that you will not build an EV supply chain, just to keep it simple, without security of supply. Okay. And so what we have also seen since 2017 is whether or not it's the US-China trade war or of course, COVID. And I think that, that last chapter for COVID is not yet written. Supply chains are going to have to get tighter. They're going to have to get shorter, perhaps smaller and more resilient and more robust. And so what that means to me is if you're in the European Union, you're going to want to source your materials from the European Union. If you're in North America, you're going to want to source your materials from North America, or let's just say allies. And so that is something that governments and companies in particular, I think, are really reckoning and struggling with right now. How to not only ramp supply of lithium, of cobalt, of nickel dramatically, but do so at the end of the day, you're either doing it on a net zero carbon emissions basis, or you're headed in that direction. And so it's a really, really huge challenge for the mining plays right now.
Yeah. Interesting points. Let's do follow the money. And you said money is flowing into the sector, but where is it flowing? Like I think we talked about this. Just remembered a few months ago that money is flowing more like in charging stations and companies. Like we talked briefly about SPAC investments and SPACs coming into the space, and they were all like down. None of them made it all the way up to the producers of actually the raw materials that go into these charging stations. Let's say copper, right? Where is the money flowing right now?
Well, that is, again, the other shoe, I guess, hasn't dropped there. It's for one thing to read a headline and General Motors to say, well, we're going to spend $30 billion on our electrification and our autonomous vehicle strategy by 2025. But it's just not clear where that money is going to be spent. How much of that's going to go into upstream raw material procurement, how much of it's going to go into raw material refining. I mean, we just don't know. And, taking it outside of the private sector and looking at what governments are talking about, obviously, even here in the United States, the stimulus debate rages on. But again, it's great to be able to say, okay, the Biden administration is going to spend whatever the number is, $174 billion on charging infrastructure, but how and when and where are open questions right now. So, there are big dollar signs, I guess, getting thrown around in the space and then thematic. And I'm glad to see it because it's going to be necessary, but we just don't know yet how all of that capital is going to be allocated.
Yeah. We've just seen Cisco come out with an Cisco Green SPAC. Or Cisco Green Development, I think they're called. So I'm curious, like, are you there's a lot of unknowns still. As you said, where's the money flowing? Are you seeing at least a bit of a trend flowing into the raw materials? Like, and what do you need to see there? Like, and where do you want to see money flowing to? Like, what do we need to see?
Well, yeah, I think, the mining and the refining are the most important issues if we're serious about not building a supply chain that doesn't touch China, but one that certainly minimizes its exposure to China, which has always been, I think, the goal, certainly under the Trump administration. And arguably, I think the Biden administration has similar aspirations. The only SPAC that I can think of off the top of my head that has gone that far upstream is, of course, MP Materials. And they have done a great job of rehabbing Mountain Pass and trying to get to phase 2, which is going to be separating the actual oxides. Of course, they have ramped their production, but they're sending the unseparated material over to China. So we're still sort of at square one, at least on the rare earth side of things. Hopefully that will change. But look, the capital, I would argue, has to go into the mining and the refining. It's great to have charging infrastructure and everything else, but it's not going to matter unless you have a reliable source of, and I guess a plan for 3 to 5 to 7 to 10 years of raw materials.
And where are we in that cycle right now? Like, of course, supply seems still limited, and I mentioned it, like all the governments are talking about going full electric by 2030, 2035.
Mm-hmm.
Where are we in this? Like, and how real are the numbers that we're seeing being thrown around in Financial Times, or like supply and demand wise? Like, where do you get your information from, and how realistic are those like demands from the governments?
Well, I think the demand, so every government might be a little bit different. Some of the demands might be non-binding. Some of them, might use sort of a carrot and a stick approach. I mean, the carrots obviously being subsidies for individuals to purchase electric vehicles, and the sticks might be, for example, in Germany or in the European Union, emissions, I guess, fines if your automobile emits a certain amount of CO2 or kilograms of CO2 per kilometer driven. So, it varies from country to country. Look, it's back to your original question. I think it's still early days. We just don't know. I mean, is a 20% EV penetration realistic by 2025 or 2030? My own personal view is that if we get anywhere north of 10% electric vehicle penetration globally by 2025, that's a huge win. Okay. And part of that has to do with the infrastructure that has yet to be built out. But I think a lot of it has to do with an eventual lack of raw material availability. I think the paradox here is that lithium, cobalt, graphite, they're not rare. Okay. That is very clear. They're found all over the world in the Earth's crust. I mean, you could produce lithium from seawater if you absolutely had to. I wouldn't recommend it. But the problem is not producing lithium, it's producing battery grade lithium. And you have this other interesting situation where battery chemistries continue to evolve and purity specs get tighter and tighter and tighter. And so that's another angle, I think, from an investment perspective about, where you might want to think in terms of investment beyond the upstream portion of the supply chain, thinking very hard about, for example, cathode or anode technologies or even magnet technologies. That's kind of the next phase of this cycle, I think.
Interesting. And I mentioned to you off mic before we went live here that I've been approached by a couple companies in recent weeks. One was in the rare earth space. The other one is in the lithium space. They're just about to go live, meaning IPO or RTO on the venture exchange or the CSE even. But those companies, do they actually have a chance? Like, are they late to the party? Or I think you mentioned just a second ago, like it's still early days. But for those supply chain those companies, raw material companies, it's not like they start producing tomorrow.
Yeah,
right?
I think it's early days in terms of EV penetration. You like to see that sort of parabolic move of EV sales going up and up and up. And I do think that general trajectory is going to continue. To get to your point earlier about, is it too late for the juniors? A lot of that depends on how successful, for example, the existing lithium producers like Albemarle, like SQM, like Livent, or Glencore on the cobalt side. How successful are they going to be in terms of ramping their capacity? They have made multi-billion-dollar bets, 100 million or billion-dollar bets in terms of adding existing capacity and saying all the right things about growing in line with the market and market demand. But if we've seen one thing in lithium in particular over the last 5 to 10 years, is how difficult it is even for the majors to ramp capacity on time and on budget. So, I don't wish ill will on any company in the space, but any hiccups in terms of additional production from the majors provides the opportunities, I would argue, for the juniors. And, then the question becomes, well, what do you look for in a junior? And, there's no secret formula here. I mean, you ideally want to find a management team that has done this before. And that's actually quite rare. But that would be the first real differentiator for me, at least. I mean, who's done this before? Who has actually produced battery grade lithium? And, they're out there, but it's rare. And then everything else beyond that kind of falls into place, large deposit in a reliable geopolitical jurisdiction, And then you just kind of go from there. So there really isn't a secret sauce here.
Yeah, quite interesting actually. As a follow up to that, like you mentioned, size of the deposit, and like what are some thresholds? Like, and who do you need to be appealing for? Like, in terms of size, like what's the parameter there? What is size?
Well, I think, that really boils down to mine life, obviously, right? And so, if you are an OEM and you're looking across the landscape of, okay, who are the lithium producers, maybe the next wave of lithium producers. So let's exclude Albemarle, let's exclude Livent and SQM. Who else out there has a mine life that is, say, in excess of 10 years? That's what I would sort of put as a minimum in terms of an ideal mine life. It gives you a good idea of the economics. Ideally with higher lithium pricing over time, you're going to get a great payback, and you're also going to generate a ton of cash flow, especially if lithium pricing stays elevated. So I would say kind of a floor of 10 years for a mine life would put you in play, okay, in terms of offtakes or financing from downstream players like OEMs or battery manufacturers. They want to know that you at least have a chance of being around in 5 to 10 to 15 years.
Interesting. Like, what are some of the themes you're seeing right now? We talked lithium, obviously, as well. Are there some other metals, or in general, like, I'm specifying a bit too much here, but what are some of the investment themes right now? Like, where are you allocating some of your cash following these trends? Where should we, as the retail investor, maybe look at?
I'm still really, everyone says, oh, rank the metals. I mean, I just think that lithium and copper in particular are really, really appealing to me. For all the reasons that I have mentioned on interviews like this in the past. I just think that, especially on the lithium side, producing battery quality material at scale is very, very difficult to do. And you still have a subsection, I would argue, of the supply chain, downstream players that have just started to realize that, how difficult it is. In other words, they can't call up their supplier and say, give me another 10, 15, 20,000 tons. It's going to take time. Because it's going to take time, I think, the long-term lithium price for me that I sort of use in my own models is $12,000 to $13,000 a ton, a little bit lower than where we are today, but again, kind of at a steady state with, lithium, say, at 1 million tons a year of demand by 2025 or 2 million tons by 2030. I think $12,000 a ton is the new kind of happy medium. And again, copper, it's a little bit of a different story, obviously, much bigger market. But the infrastructure, not just involved with vehicle electrification, but the greening of the grid is going to require a lot more copper. And, these aren't, a new copper mine is a multi-billion-dollar proposition, right? And we've seen what has happened in recent months and weeks with strikes and water challenges. So, I think you look at those two metals and you also think about ESG mandates, and you're really not going to decarbonize, I would argue, without a lot more lithium and a lot more copper in circulation. I mean, it doesn't mean that, I'm not bullish on nickel or graphite or some of these others, but in terms of the immediate term, I would argue that even though copper has been on a pretty insane run in the last year or so, partially because of the COVID bounce back, if you will, pretty optimistic about both of them going forward.
Yeah, I have to ask you, since I have you on, like one thing that stuck with me from our session, from SF Online session 9, is that recycling is not worth it yet. That recycling is just not at a, like, and I think it was Alex King from the Critical Materials Institute, is like we're trending in the right direction, but right now the amount of recycled material or regained material is too minuscule for, let's say, a bigger offtake agreement. Like, do you agree with that thesis? Like, and how does that factor in at what we're looking? I know copper recycling is easier than maybe rare earth recycling or magnet recycling. Of course, there are different aspects of it. But where are we on that recycling trend?
Yeah, I still think that, I mean, I'm not maybe quite as bleak on recycling as some other folks out there, but look, the majority of the recycled material or the battery material that's going to be recycled between now and 2030 is going to be scrap, as opposed to spent or damaged batteries. Lithium-ion batteries continue to get better and stronger and more powerful, and they have a pretty legitimate life cycle, I should say. That said, I do think you want to be building out the recycling infrastructure today and establishing relationships with potential customers because when that pinch comes later on in this decade, you're going to want to have a proven track record of the ability to recycle any kind of cell format, and really go from there. So yeah, it is early days, but again, it doesn't mean this, to me at least, it doesn't mean that this isn't something that we should be pushing forward on. Obviously, it's a great ESG play as well.
Interesting. And completely off-topic question: Tesla, how are they handling recycling? Do you know?
I think they've got their own internal plan. Would be the right way to probably put that. That's my understanding.
Yeah, because that's something for me as well. Like, is recycling in general with anything green energy, like being it wind turbines, the magnet in wind turbines is a big question mark for me still. Because I've seen a report the other day, it's been a while actually, where they just buried the wind turbines in the ground because they didn't have a proper way of disposing them. Right?
It's a challenge, and again, battery chemistry continues to evolve, and you have multiple, I guess, processes for recycling lithium-ion batteries: pyrometallurgical, hydrometallurgical, cathode to cathode. So that continues to evolve as well. But again, at the end of the day, we talked earlier about government and the role that they play. I mean, in the EU, you're going to get to a point here pretty soon, actually, in the next few years, where any batteries produced in the European Union, you're going to have to have a minimum amount of recycled content in them. And I believe China is going in the same direction. And I wouldn't be at all surprised to see North America do the same thing. So, that is part of the impetus, I think, for building out recycling infrastructure sooner rather than later.
If you had $100 to invest right now, how would you allocate the money in the battery metal space?
Let's see here. That's a good question. I would, oh, wow. Depends on how creative you want to get. I mean, again, the metals.
Well, the goal is to generate returns, right? It's not a
philosophical,
not a philanthropic approach.
Philanthropic.
So it's not a philanthropic approach. Of course, I'd like to invest in research and getting things started, but if you had to invest right now to generate the highest returns, how would you allocate your capital?
I would probably put together some sort of an option strategy on copper to protect my downside and generate and let's see, protect the downside, and then arguably do something. I don't know. I'd have to think through what the strategy would be, but obviously you want to capture sort of an infinite upside, and you can do that with options, whether or not it's on the ETF or specific names. A company like Freeport-McMoRan, which is a company that I do own and will continue to own, hopefully for a long, long time, generates a dividend, and is clearly, in my view, is one of the, if not the real leader in the copper space. I would also, again, be looking at some of those near-term producers on the lithium side as well. Not to say that the producers aren't going to generate an absolute ton of cash flow going forward. But again, companies like Lithium Americas, I think, that are really close to production, and also have some potential catalysts coming down the pipe in the next, 3 to 6 to 9 to 12 months, look really interesting to me as well. And I own that one too.
Fair enough. Good. No, I find it interesting because there are so many trends. I wouldn't have even been surprised if you said, no, I'm investing in the charging technology. Right?
Yeah, I'm
or
looking
infrastructure
at it,
even, right? So
yeah, infrastructure. I mean, battery chemistry technology, a company. I'm trying to think of some of the examples out there, like Novonix or Nano One. Great examples of companies that I think are just trying to say, okay, we know what the infrastructure looks like, we know what the processing looks like. Let's try and take either lower quality feed or existing feed and make it better. So you're using, lower quality material, ideally at a lower cost.
Fantastic, Chris. We are out of time. Like, I could talk with you for hours. This is such an expansive topic, and there's so many different aspects to it as well. We didn't even get a chance to really talk macro, and how, like, the governments are really developing their own strategies of sourcing, right? Like, we hinted at it, like everybody's doing a bit different, but we'd need a whole different, like, we need 2 hours just to scratch that. I really appreciate your time. We'll definitely catch up in the fall. Because there are so many developments happening. I'm personally doing more of my own research as well. I'm test driving plug-in hybrids and all of that stuff just to get a feel for what's going on. But we'll catch up soon. And I'm really interested in this, not just from an ESG side, from a supply chain side, and as I said, also from an investing side. There are more companies popping up. Do you see that, by the way? Do you see more companies now popping up with smaller projects or projects in general that you haven't heard of before? Is there that trend? Do you see that happening? Like something we've seen in 2014, 15 that burned everybody out?
Yeah, not yet. not yet. Again, what's different now is the fact that the larger pools of capital. This is not just a Chinese story anymore. Okay, larger corporates, in my view, are really igniting this bull market right now, and I think it's very, very early days. Very pleased to see again companies like Phillips 66 or Rio Tinto finally, make the commitment to lithium, because you did not really see that during the last cycle. A lot of the last cycle was FOMO and it was hedge funds just chasing returns, and I think it's very, very different right now. I'm pretty encouraged about or with the just call it the level of patient capital that I think is coming into this space right now. I'm looking forward to seeing how it's allocated and how it generates returns.
Exactly. I think that's a good note to leave on. It's definitely broader now. As you said, the bigger companies are coming in, more sustainable capital is entering the market. Fantastic.
Mm-hmm.
Chris, thank you so much. I really, really appreciated chatting with you. As I said, we could have gone on for hours. It's always exciting and interesting. So thanks so much for your time. Discoveryinvesting.com is the best website to get more content and reach out to you, right?
Yep, and I'm cberry1 on Twitter, so I'm pretty active there as well.
Fantastic. Yeah, you've shared quite a few interesting articles as well, so make sure everybody follows Seaberry. And that's it from our end. Thank you so much. I got to turn this off again, but thanks so much for joining us. This was SF Live episode 210. We looked more at the battery metal space. I'm quite intrigued by it because I missed the first boom. That was in 2015. By quite a bit, but that was good because not everything was as clear as it is now. Government positions have changed, so it was great to catch up with Chris to see what is happening in the market on the supply side. Where is the money flowing as well? Make sure to follow him at cberry1 on Twitter. Follow us, of course, at Soar Financial on Twitter or here on YouTube. Hit the like and subscribe button. Thanks so much for joining.